welcome to an episode of Finance Footnotes and the Fast Five, where I give you 5 quick ideas in less than 5 minutes. And with so much going on in the marketplace right now, I thought it was a really great time to check in. I'm going to give you 5 really great takeaways. The first one, I think, is a fundamental rule of investing, and I wish everyone would follow it more closely. And it's just to turn off the freaking news. So on the screen right now, I have this really interesting article from the Wall Street Journal that was from April 21st. That was 2 weeks ago. And it says the headline, Dow headed for worst April since 1932. Markets were being punished after President Trump's tariff policies were making things seem very uncertain. Okay, so all the talking heads on YouTube, on Twitter, on CNBC were yelling at you that things were the most volatile in almost 100 years. Fast forward to last Friday, here's an article I have from Barron's, and it's showing you that the S&P 500 notched its 9th straight day in a row win streak, up over 10% during this time frame. The 9-day win streak was the longest since in over 20 years. So if you listen to the talking heads just 2 weeks before, you would have missed that best run up in over 20 years. So please turn off the news. I think that's a fundamental point of investing. The second thing I wanted to share is that we talked in the past about how pessimistic individual investors and consumers are, but a big money poll came out from Barron's over the weekend. They do this every 6 months, and it showed that money managers, those people that actually manage, the intelligent folks that manage a ton of money professionally, are very pessimistic, the most pessimistic they've been in 28 years. In fact, only 26%, 1 in 4, are bullish or optimistic, down from half just 6 months ago. Just a couple other interesting things here on the screen. Of the 117 professional managers that were in this survey, 80% think the president's tariff policy is wrong-headed, and then 65% believe that there's going to be a bear market later this year. Now, remember, these professionals aren't clairvoyant, so just keep that in mind, because I want to contrast it with something else. So despite the fact that professional money managers are so pessimistic, there's data here that came out from JP Morgan that April saw the largest net purchases of stocks from retail investors ever. And this data goes back at least 10 years, but it's showing you that in the month of April, cash came from the sidelines, invested over $40 billion in stocks in the US stock market. And I think this, the point I want to make here is I think this acts as a put. If markets get volatile, I think there could be market that steps in, cash steps in from the sidelines and buys assets that kind of puts a put under the market. So that's just something to be aware of. And that's point number 2. While things are very pessimistic, there's still some opportunistic traders out there. The third thing I want to share with you is that despite everything you see on the evening news, the fundamentals of the U.S. economy look really strong. And as of last Friday, the April payrolls came out much better than expected, up 177,000 in the payroll in the month of April. That's building on April's momentum, which is also a great month. You can see that there's 4.2% unemployment rate out there. This is a very strong economy. Corporate earnings from the S&P 500 companies are starting to come in much better than expected. Inflation numbers in the last month have been much better than expected. So despite the fact there are real concerns and risks out there in the marketplace, including the uncertainties of the tariff policy, the fundamentals of the economy look very strong, despite what you're reading on the headline of the newspapers. So please turn the news off and just know that things seem to be going quite well on the fundamental foundational elements of the economy. I want to give you 2 optimistic points. So point number 4 here is something called the Zweig breadth thrust. It's a very sexy name for a technical indicator that basically measures the momentum and energy by which stocks are being purchased in the marketplace. It's important because it was just triggered last week. It's only happened 17 times in the last 75 years. Every single time, stocks were higher 6 and 12 months later with an average return of 16% for 6 months and then 24% for 12 months. So this is obviously no guarantee. Things could be different this time, but 17 for 17 is a pretty good indicator that there's a lot of momentum. It certainly indicates that we're probably more in a bull market coming down the road as opposed to a bear market. So something to be optimistic about. Could be a really great time to continue to put money to work. And then another indicator, you may have heard the old market adage, the old Wall Street adage that it's good to sell in May and go away. It's good to kind of skip the summer months, which traditionally have been pretty dead or negative compared to the other months. But in reality, 8 of the last 10 Mays have been positive with an average return of 4.6%. So this May could continue to be an outlier in terms of the sell in May, go away adage. And the last thing I want to share with you, which I think is really important, this is the number 5, what's going to happen with interest rates? A lot of people are concerned about their money market rates going down or what's going to happen if they can refinance their mortgages, etc. There's a really great article from a very well-known person in Barron's this week. His name is Rick Reeder. He's the CIO of Global Fixed Income for BlackRock. BlackRock, as you may know, is the largest asset manager in the world. So he's a pretty powerful guy. And in this interview, it's wide-spanning, but one of the things he said is that my base case, in fact, is that rates are going lower. So despite all the rhetoric you hear on the news about inflation and rates going up, here's a very sharp dude saying he thinks the opposite. So taking a step back, 5 quick ideas. I do believe that things are, the news makes things sound much worse than they are. So professional money managers are very pessimistic at this moment. So you're seeing a lot of that negativity in the marketplace. I think there's reasons to be optimistic. I think the economy foundations are strong. I think the Zweig bread thrust looks good. I think May in particular is good. And listen, Rick Rieder, top person on Wall Street, thinks interest rates are going down. So if you have any questions, please let us know. And we'll look forward to seeing you next time on Finance Footnotes.